You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Wednesday, first day of April, 2020. Thanks so much for joining us. Whoever you are, wherever you are, well, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. And that will give you one-click access to the show each and every day. That's also the link you want to use if you have questions, if you want to participate in the discussion. That's the one place you can go where you'll have access to a chat box that is monitored, and we'll be happy to answer any and all questions that you have. You can also point any internet-connected browser to cfrn.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You can also find us streaming live during the show on YouTube, on Facebook, and Twitter. Let's open with a word of prayer. Father, you alone are worthy of honor, glory, and praise. With you, we believe that we can overcome every storm, and that includes the global impact that COVID-19 is having on our world. Father, we ask you to heal those who are sick, protect those who are not. We pray that you would give our leaders extreme wisdom as they navigate this pandemic and economic uncertainty. Father, we pray that you would strengthen your global church. Reveal to us how we can partner together to reach the needs of all those around us. Father, we pray that you would calm our fears. Fill us with your hope, joy, and peace as we continue to put our trust and faith in you. And God, we pray that you would use this pandemic to pave the way for spiritual renewal. We want your glory, power, and healing to be on display. In Jesus' name we pray. Amen. Okay, well, let's take a look at the chart. The S&P 500, Emini Futures, daily chart. And there it is. We've been talking about this, well, since we put in this swing low. The day after, as we were building this big green candle, we talked about, for those who speak candlestick, this was a pretty powerful reversal, but we also knew that that reversal would most likely have a cap on it right here at this green line we call the BBC bull-bear cross. When price crosses below it, we're bearish. In other words, we're looking for lower prices. And when we cross above it, we're bullish, looking for higher prices. And that's whatever time frame you're looking at, whatever market you're looking at, that underlying principle applies to them all. So we began the 3-day rally, extended into the 4th day. We hit the BBC. We expect that to be good resistance until it isn't. Resistance sent us back down. We opened here. This is a gap lower open. We powered up. We hit resistance again. We're still looking for that next leg to the downside. And between what the market gave us yesterday and what the market gave us today, here we sit. Now, the market has to make a very important decision right here, because declining price coming off resistance provided by the BBC has now run into blue and climbing. So any market, any time frame, when declining price runs into blue and climbing, that's the potential for support. If we close below blue and climbing, then that opens the door for us to go back and test these lows right here, this low, and if that fails to hold, then there's every good possibility that we then go back to test this low. So we'll be watching this very carefully, very closely, because the future of the next few weeks, possibly even the next few months, sort of hangs in the balance right here. If the market can find solid footing, push us back to the BBC, and then we have price close above the BBC, instead of looking at a leg and a retracement, a leg, a retracement, and another full leg to the downside, we have a different picture. We have a leg, a retracement, a leg, a retracement, and then a leg that takes us back up to this area. The bearish cross, which began what some have called the worst market since the 30s, it took place on February 26th, 27th, at a price of roughly 32.80. Okay, look at the horizontal line on my cursor, you'll see it, 32.80. So if we can find solid footing here, if we can close back above the BBC, if we can start to build legs to the upside, when we get here, that's the one you're going to have to watch for, because that could start the whole cycle over again. So we'll keep an eye on this. We'll keep you posted. We'll walk you through it, talk you through it each and every day, as we have done. So far, the market has done exactly what we would expect the market to do. The market's funny that way. It doesn't matter what's going on in the world. Be it politics. Hey, Michael. Morning.
Hey, morning. Sorry, I didn't know my mic was on.
No, that's all right. No problem. No worries. I'm going to go over the prices around the world, and then it'll be yours.
Okay.
Just give me one second.
All right.
All right, guys. These are the numbers from around the world. These are what they call the cash markets, or the indexes. Currently here at home, the Dow down 727 points. That's over 3%. NASDAQ down 234. That's over 3%. S&P 500 down 93, 3.5%. And the Russell 2000 down 56. That's almost 5%. If you were participating in the discussion last night in our Telegram discussion group, I put up a chart of the Russell. All of the markets were trying to turn, and I'm going to show you that on the charts today. The Dow, the S&P, and the NQ were all trying to make the turn and head back towards their respective BBCs on the 30-minute chart. But the Russell just didn't want to give it up. We often refer to the Russell as our man in the street. The Russell is 2,000 small cap companies. Okay, we know the S&P's 500 large cap. We know what the Dow is. Those are the 30 blue chip stocks. But the Russell, sometimes being small cap companies, I refer to it as the man in the street, because sometimes that's where you can find out where things really are, what's really going on. And, well, we'll take a look at that chart, and I'll show you what I shared in the discussion group last night. This is all part of learning how markets work and learning how to read a chart and understand the valuable information that the graphical representation of these candles provide. Again, the S&P down 93, 3.5%, and the Russell 2000 down almost 5%. In the commodity basket, crude oil down 14 cents, trading 20.34 last. Gold up $7.10, trading 16.0370 last. In the Asian markets at the close, Nikkei posted a loss of 851 points. That's a drop of 4.5%. Shanghai only lost 15. The Hang Seng dropped 517 points. That's a drop there of a little over 2%. And in the European markets at the close, FTSE down 217, DAX down 391, and the CAC down 188. That's roughly a 4% decline for each of those European markets. Needless to say, that gives us a red day in Asia, a red day in the UK, and it's a big red radio Wednesday here in the US of A. Let's go to Michael and find out what happened in the live training room this morning. He'll give us a recap of everything that took place. When I come back, we'll go over the Concierge Trade Alerts, the Logic 247 alerts. We'll talk with John, all that, and answers to your questions. Michael? Take it away.
Okay, I got it. We'll start with this. Close that. Here we go. All right. Here we go. You should be looking at my screen.
Got it. Locked and loaded. It's all yours.
Okay. All right. Good afternoon, everyone. Today is the first day of April 2020. Today, well, first, if you have not taken a free trial with us, go to the homepage at CFRN.net and you'll see the big green button that says free trial. Click on that and you'll be brought to this page, EminiTradingSchool.com. On this page, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training specifically for you. Then, hit the send button. Once you hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that confirmation link, we don't know that you took the free trial. So, that's that. Now, today, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the first day of April 2020. Today we made 12 ticks on the euro, 14 ticks on crude, and 18 ticks on the ES. Put us at plus 440 on the morning session. Today took 10 minutes and one trade to get to my goal for the day. At that point, we're up $100 a contract, and we took a total of 12 trades today. So on the month now, we're at $440. That's over one day. So we're averaging $440 on the year now. On the year now, we're at $22,413. That's over 59 days, averaging $379 per contract per 2-hour day. Okay. Now, let's go take a look at what happened today. I think we traded all 4 markets. Yeah, we did. Gold, I had a bunch of break-evens. Let's see. Again, there were just so many trades that I'm just going to go over what I marked and what we did do. Okay, now I missed this first one right here. That would have given us the goal for the day, but I missed that one. We had a break even right there. There was a shorting opportunity. Nowhere. A long opportunity here. Okay, we had another break even there, another break even there. And, while gold was just marching up like this, you got to look at the slingshot to see what the slingshot's telling you. And I'm sure I was either talking to somebody or fixing somebody's Ninja Trader up or something like that. Right there. Then another short from right there. A short from there. A long right there. A couple of shorts here that I missed. Along there and along there that I missed. And then we get into the break. Now, I'm not going to go through everything in the break, but there were a bunch of trade opportunities. Now, what I was looking at earlier today, not on the gold, I'll do it on the ES. I'll show you later on the ES. But one thing to look at, if you jump to the larger time frame, where are you in relation to the BBC? Okay. Is it going to approach a BBC? What's the slingshot look like? Now, that's 15-minute, and if we jump to the 30-minute, that Dwayne likes to use, where are we? We're up above it. Green line's all the way up into the cycle, so it's time for it to pull back. Okay? Just something to consider. The euro. What did we do on the euro? We had one trade on the euro right here. We picked up 12 ticks. Okay? And we missed a short over here. And the euro was pretty choppy today. And it's getting choppy again. And that was pretty much it for the euro. Crude oil, we had crude inventories come out today. And it was a huge miss. Huge miss. Missed by like 300%. But what do we do on crude? We had 3 trades. Now, it was pretty choppy in here in the morning session. And turned around. We missed a long trade here off the BBC. We took a break even right here on a trend line trade, and that was a bad entry on my part. Then we followed it right up with another trade. We picked up 14 ticks on that, and then we had a break even over here. But yeah, the inventories, huge miss, huge. They were expecting a build at 3 million, 3.7 million, and they got a build at 13.8 million. So nobody's traveling. Okay. Now on the ES, I'm going to go over what I've highlighted and what we actually did. We had 5 trades on the ES. Okay, here we go. Started out right here. This was our first trade of the morning. And we got the goal for the day right there. We picked up 8 ticks. Next one was over here. And I only ended up getting 2 ticks out of this. It ran all the way up there and then back down here. And I ended up with 2 ticks on that. See, I was saying, and I'm going to keep saying, you got to watch the slingshot because that's going to tell you the story ahead of time. On the small time frame like this, it got really choppy through here. There was a shorting opportunity here, right there, right there. We had a break even there. Missed a long right there. That would have been a really nice one. Missed another long, another long, another long, and then a short. Okay, and over here, what do we get on this? 8 ticks is what we ended up getting. And I had totally forgotten that I had it on. And that's why it went all the way up here without me locking in profit. And when I looked over at my DOMs, I think I was either setting up the industry or I was setting up the spreadsheet for the month. Either way, I missed it. Well, I forgot I had it on. I didn't actually miss it. Okay, let's keep going here. There was a long opportunity right there. A short opportunity here. We had a break even right there. Just looking at the slingshot. Yeah, there was another long here. Okay, and then we get into the break. Now, what I was going to show you here this morning on the 15-minute, when price was getting up above, in here when price was getting up above the BBC, it said if we have a candle that closes below the BBC, then that's probably going to send it down to the lows of the day. And that's exactly where we are now. On the 30-minute, right here, I said look for it to get up and hit the BBC, and when it hits the BBC, it's likely going to drop back down to the lows of the day. And that's exactly where it is. I did say that this morning. Okay, and with that, let's look at the spreadsheet again really quick. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. So this was our total from last month, and this is our start to this month. We're up $440 per contract, and you can see I missed a whole bunch of trades. But I was trying to do training today because we have an open house, and I wanted to do a lot of training, and I did. I still managed to put on 12 trades, but out of the 12 trades, 7 of them were break even today because the markets were really choppy. Okay. So today's the first day of April 2020. Made 12 ticks in the euro, 14 ticks in crude, and 18 ticks on the ES. Put us at plus 440 on the morning session. And today it took 10 minutes and one trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 12 trades. So on the month, obviously, we're up $440. On the year now, we're up $22,413. That's over 59 days, averaging $379 per contract per 2-hour day. Okay. Now, if you have not taken a free trial with us and you want to, go to the homepage at CFRN.net. It says free 5-day trial, no credit card required. Click on that, and you'll be brought to this page, eminitrainingschool.com. You could just go directly to this page. When you do, put in your name, put in your email, put in your phone number. Tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. All right? All right. With that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park.
And we're back.
And we're back. Yep, I see your screen.
Recap of the recap.
Today it took 10 minutes and one trade to get to $100 per contract.
That's a good bingo.
It's becoming a regular thing. You know, it's
Amen.
with the, yeah, I know, knock on wood.
Yeah.
It's starting to get a little more volume in the ES right now. You know, it's probably twice what it was last week. But it's still, you know, a fraction of what it should be. So we'll see how things pan out here as we move forward. Gold is still, it's hard to trade because it's usually got a spread, and so you lose money as soon as you get into it, and it jumps all over the place.
Yeah.
You know, right now, if somebody put a sell on for 10 contracts, you know, it'd be spread over 5 positions probably.
Here, let me bring up a Dom and show folks what you're talking about.
Okay.
Now, does your Dom look the same as mine?
Hang on, let me bring mine up.
The numbers change so rapidly
Yes.
that it's difficult to...
Yeah, mine's the same. But I'm talking about gold. If you look at gold, Dom.
Oh, you're talking about gold, okay.
Yeah.
Let me bring up the gold. There we go. And for
You see
those
that?
who don't know, I don't have the auto sum bid turned on here, but here's how you do it. If you're on the trial, if you're using the DT Pro platform so that you can use our indicators during your trial, which you really should, so that you can take full advantage of everything that the trial offers you, you click that little gear, and then you tick this box, auto sum bid ask. You can apply it to all of your DOMs across the board. Why not? Click apply, click OK, and now you can see going 10 positions deep. There's a total of 41 contracts on the bid, 42 on the ask, but you see how rapidly they change. But look at the individual position sizes that Michael was speaking about. Now, friends, these are the footprints of retail traders. Goldman Sachs doesn't get out of bed in the morning to trade 3 or 2 or 5. There's an absence of institutional activity here, and that's worth noting. Okay. Russia announced yesterday, I don't know if you saw this news.
No, I didn't.
In fact, let me bring up.
Of course not. I haven't watched it.
Russia. Now, I personally think this is a head fake, but what do I know?
Yeah, something happened.
Yeah, I
Don't show again. Maybe.
Oh, yeah, I should have done that. Russia stops buying gold. Russia's central bank stops buying gold as the low oil price bites. Okay. Oh, we would like to get rid of this advertisement here. Oh, there we go. Russia's heavy reliance on oil to balance its budget could lie behind a sudden shift by the country's central bank from buying locally mined gold to encouraging miners to export what they can. The surprise move sent a shudder through the gold market, triggering a $40 fall in the price, which dived back below $1,600 an ounce. Now, how clever if you're a buyer of gold, but gosh, you don't want to pay the current high price. You would like, certainly you would like to get a much better price, a lower price. So if you tell the world, hey, you know what, we're not going to buy any more gold, we're a little bit broke because of the oil business, suddenly, in the twinkling of an eye, you're able to buy gold $40 an ounce cheaper. Not trying to start a conspiracy theory, just stating something that I think to be very possibly true. Until earlier today, Russia's central bank had been soaking up a large portion of the country's gold production, spending an estimated $40 billion over the last 5 years to amass a stockpile of 2,279 tons of the metal. And by the way, a ton of gold is different than a ton of anything else. The actual weight is different. In fact, it's typically spelled TONNE. The sixth biggest holding in the world, Russia, behind France and Italy, but well behind the U.S. with its 8,133 tons. While most central banks own some gold, it has been Russia's buying which has stood out, with the urge to acquire gold seen as a way of cutting the country's exposure to the U.S. dollar and its official reserves. But with Russia's national income badly bruised by the collapse in the oil price, and with the threat of oil falling even further, without a deal with Saudi Arabia and the U.S. to better manage the oil market, a cash flow crisis could worsen, which might be a reason to look for other sources of revenue. Any movement in gold investment policy by a major central bank is important in the gold market because they are the biggest owners of gold and have the financial muscle to shift the price, whether they are on the buy side or the sell side. So in light of that, that helps to explain this. As I said, this is retail activity. This is not institutional buying and selling that we see on this gold DOM, which stands for depth of market. And there we go. Now, seasoned gold investors are familiar with the effect central banks have on gold, with the most dramatic events occurring in the 1990s when it became fashionable for the banks to cut their exposure to the metal, despite its status as a currency of last resort, or you've probably heard it referred to as a safe haven investment, or when people move from other asset classes into gold, you've heard it probably referred to as a flight to quality. The shift from being benign holders of gold to active sellers, especially a controversial decision by the Bank of England to sell the lion's share of its gold, drove the price from around $400 an ounce at the start of the 1990s to $250 an ounce by the close of that decade. The central bank selling only started to end in late 1999 with the signing of the Central Bank Gold Agreement, a deal also known as the Washington Agreement, which limited central banks to the collective selling of 400 tons of gold a year, plus a ceiling of 2,000 tons over a 5-year period. The Washington Agreement was renewed several times, but officially came to an end in September of last year, 20 years after it was agreed. Potentially, there's a connection between the end of the Washington Agreement and the decision of Russia's central bank to stop buying domestically mined gold, but the more likely reason is that the oil crash is hurting the country's budget, Rather than persist with a plan to absorb the country's gold production, the new policy is a reversion to a status of using gold to earn dollars without actually saying that. So that's the story on gold. Very interesting. Never seen anything quite like that, Dom, that we just looked at in regards to gold. Now,
No, it's a mess.
now let me go off topic for 1 second and ask you a question while I'm thinking about it. If you were to sit down with the plan to count from 0 to 1 trillion, just like this, 1, 2, 3, 4. How long do you think it would take you to count to 1 trillion?
You die.
Several times over. 31,000 years. I know, that's, gotta let that sink in.
Yeah, that's
How's
a lot of years.
How is it even possible? Now, the first article I read said 45,000 years. And I'm like, what? And so I went to my friend, the Internet's house, and I asked the question again. How long would it take to count to 1 trillion? There's 24 hours in a day, so you would count 24 times 60 times 60, 8,640 in 1 day, 365 days in a year, 31,536 in 1 year. To find out how long it would take to count to 1 trillion, divide 1 trillion by 31,536,000. And anyway, at the end of the day, you've got a figure of 31,709 years. Now, that's just going 1, 2, 3, 4. Now, trillion's a lot, but we're hearing these numbers thrown around. I mean, this current bailout package that Congress has approved, was it 2 trillion?
Yeah, 2 trillion.
2 trillion. So, absolutely stunning. Just stunning.
It is.
I'll leave it as stunning. Okay. Now, we've already talked about the ES daily chart. We are building that leg to the downside that we anticipated. Okay. Here was the swing low, nice little candlestick signal there that in this context says look for a rally, which we got. We know that when price approaches the BBC from below all markets, all time frames, the high probability is that you're going to find good resistance until you don't. So we got resistance. It sent us down to and this was a gap lower open. Okay, so this is where we closed on Friday. This is where we opened Sunday night, and the rally kicked in. So I know it's a little crowded, but it's a 38% fib retracement from the swing low to the swing high at the BBC. So the market found support at the 38% fib retracement. Buyers managed to take it up to the BBC one more time, but they couldn't get through it. Now price has declined and met up with blue and climbing at that 38% fib again, where we found support just 2 sessions ago. If we close this session today below blue and climbing, if not tomorrow, then Friday, blue and climbing is going to become red and falling, just like you see happened here. Okay, when that happens, where do we go? Well, initially, we've got this 50% fib below us, and then the 62, and then you've got this swing low that was put in on March 23rd, and that swing low being 2174. So again, if today, when the markets close, now for us the markets, really never close. They close for 15 minutes from 4:15 Eastern. Stocks stop trading at 4. Futures continue to trade to 4:15 p.m. Eastern. They shut down for 15 minutes. They have to sweep the floor, empty the ashtrays, that kind of thing. Then they reopen at 4:30 p.m. Eastern. They trade for 30 minutes, and then they shut down at 5 p.m. Eastern, and that's the official end of the session for, today is Wednesday. Okay, so the Wednesday session for futures traders officially ends 5 p.m. Eastern today. Tonight at 6 p.m. Eastern, the markets will reopen, and that's the beginning of the Thursday session. Now, many traders are not familiar with Globex. Most traders, in fact, I don't know the exact percentage, but of all traders, futures traders represent a sliver of all traders. Most traders, of course, being involved with equities, individual stocks, that type of thing. And of course, there's ETFs and there's options. There's a number of different vehicles for both investing and trading, which are two different things. So we'll watch this, we'll monitor it, and in the meantime, as this bigger picture unfolds, this is like a roadmap. This tells us on the smaller time frame what to look for, what's important. So on the 30-minute, this is the S&P 500 E-mini daily 30-minute. Now, this is a this week zone, and so is that one. No, that's the one that's from last week, the 75.76, and that was an important, and this is why when we share the weekly zones with the whole world, as we do every Thursday, and I'm going to probably put most of them up on the chart today, it's Wednesday, but partners and passport holders get the new zones Monday morning, 6:15 a.m. Eastern, and we've been publishing these zones since December 14th, 2009. So we just had a 10-year anniversary. Price traded up through this zone from last week. At this week's zone, it ran into resistance. Only 3 things happen when price encounters a zone. One of 3 things. The most likely thing is consolidation, which you see here and everywhere you look. When price gets to a zone, look for consolidation. If you don't get consolidation, second most likely thing is rejection. Okay, and this is what rejection looks like right here. Price comes down, touches a zone, but by the time the 30-minute candle closes, all you have left is wick touching the zone, not the body of the candle. Okay, so number 1, consolidation. Number 2, rejection. See, we have rejection again here, we have it here. The third thing that can happen, it's the least likely thing to happen, but it happens. We call that the slice. Okay, and the slice is when price rips through a zone. It doesn't matter which direction, it rips through a zone as if it weren't even there. It's the least likely, but it happens. Now, when price slices through a zone like it did right there, the next high probability thing to happen is when that move runs out of steam, price will tend to retrace to the zone that it sliced through. Like in this case, it was a down move. So when this move ran out of steam, price retraced to the zone that it just sliced through. See, coming down, we expect it to be good support. If it fails to be good support, we need to know now, well, okay, will you be good resistance for me? Price retraces, okay, and yes, the answer is yes, I will be good resistance for you. Now, these are unusual times to have two slices back to back. That's unusual. We got the slice. Price attempted to pull back, but the selling pressure was such that price just wasn't able to do the deal. It couldn't pull all the way back. But that's okay, because we know how to handle that too. Everything we do is rooted in logic. And I don't mean logic as some, esoteric kind of term. When your mama said, son, ain't you got common sense, right? Now, I don't mean to insult anyone by saying that, but that's what my mom used to say to me, son, don't you use your common sense, okay? And we all know some people have greater degrees of common sense than others, because the markets are unusual in their behavior, in their nature, all of that, and you know that if you've been at this for any length of time. Looking at this chart, to most people, unless someone has taught you or trained you, then how do you know what's logical and what's illogical? Well, 2 hours every day, Monday through Friday, 9:30 to 11:30 a.m. Eastern. Michael does a very good job of explaining the logic behind how the markets move. We say how markets work. You can give it any label that you want. But price is continuously trading between support and resistance. There's different types of support and resistance. There's fixed support and resistance. That would be these weekly trading zones, because once we publish them Monday morning, 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change. We don't massage them. We don't manipulate them. They're just there. There's also dynamic support and resistance. That is what's happening in the market right now. So right now, price is trading 24.56. Let's look left. Okay. This chart tells us that the next level of support is right there. Why? Why is that? Well, the market has a tendency to repeat itself. Important prices, important areas are almost always tested. So when we gapped lower on the open Sunday night, okay, buyers were more than willing to pay this price. Swing low of that candle was 24.45, and they drove it up, up, up and away. A leg and a retracement, and a leg and a retracement, all the way up to this swing high, which came in at $26.35.75. Okay. Is there a law anywhere that says price has to go to this price? No. However, it is the high probability thing. It is the logical thing. if buyers were willing to pay this price the other day and were able to reap this kind of a reward, then you got to believe that not only are they going to be very interested at being able to buy one of these contracts at this price, again, some would consider that a gift from above. Not only is that dynamic in place, but there's probably traders who missed this move. Maybe they work for an institution. Maybe they're with a bank or a hedge fund or whatever the case might be. Institutional buyers buying in, large quantities. So they drove it up, reaped a reward. But those that missed this opportunity, they're going to be very eager. They're going to want to make sure they don't miss it the next time around. So what do? Sometimes they come in early. Am I saying that perhaps this swing low becomes the new support? Dynamic support? It's very possible. We actually have an indicator dynamic support and resistance, constantly monitoring the market to show you where current support is, or resistance. The green dots represent support, the red dots represent resistance. As price was climbing here, you can see the dots kicked in, okay? Once the market finds resistance, it's going to then go look for support. When it finds support, it's going to go look for resistance. That process repeats itself again and again.
John?
Yeah.
John just popped in.
Okay. All right, guys, we're going to talk to John here for a few minutes. When I'm done, I'm going to go over with you all of the Concierge Trade Alerts from last night. I'll go over the Logic 247 alerts. These are great times. Now, let me clarify that statement. This is a very bad time for the world for so many reasons that I don't need to explain to you. But as a trader, there are incredible opportunities available in the market. I know what you've heard, man, the market's crashing, it's down again. But again, as a trader, there are opportunities available right now that you probably have never seen the likes of and may not see again for some time once the dust settles. So be sure to stick around after we talk to John. I'm going to go over all the alerts for this week. So, John, welcome to the show. Good to have you with us.
Likewise. Thank you very much.
How you feeling?
You know, I thought it was about 97%. Kind of last night going into this morning, and still, there's still maybe feeling a bit nauseous today for some reason, but other than that, not too bad, thanks. So,
Okay.
listen, that was a very interesting call yesterday, by the way. That was a great call with that Rich. It was a fantastic call, actually. It was very interesting. I'm sure it was very valuable to everybody.
What was it again now, John?
But you're the guy who got the infection.
Oh, yes.
Right.
Yeah, Rich, there you go. Yeah.
Yeah, right. Yeah, no, it was.
Yeah, he's a good guy.
Yep. I mean, look, hopefully the world is moving pretty rapidly towards getting medication to people immediately, like sooner rather than later, because obviously if you don't get it in time, you're really in danger of getting in a hospital, and once you're in a hospital, your chances diminish pretty rapidly. I mean, Prince Charles, Boris Johnson, and Prince Albert, and a whole bunch of other people seem to be recovering from this, which is great. But it is, so other people have not made it, and unfortunately, the situation in New York is very troubling. And
Well, I'm sorry, John. Now, what was that? What was happening in New York?
the situation in New York is very troubling,
Okay.
and it looks like it's going to be another 9/11, maybe 3,000 people in New York before it's all over, maybe worse. I think in a way, the very big numbers they put out yesterday were to kind of shock people into being more compliant, and a wake-up call, and obviously preparing people for the worst. If it's better, obviously the work they've done, the better it is for everybody, plain and simple. But I think they really came clean yesterday with, there was a lot of things that came clean yesterday, including the fact that the British scientists think that the Chinese situation is about 40 times worse than all the nonsense they've been giving us. So, which fits the picture in everything we talked about, including on this show. You heard it here first. So that means about 3 million infections and about 120,000 deaths. And then we're seeing live in real time what they had to deal with on the way, before us. So,
Correct. Right.
but they had it under wraps. Second thing is, Tucker Carlson has spilled the beans, got the scoop on the fact that this really did come out of the lab, more than likely. It was either the lab or the pigs, one of those two. That's my bet.
Right.
And or the deep state, one of the three of them. There's three possibilities. So but on the positive side, last time I looked, there were nearly 180,000 recovered, and I think that's way behind. I wouldn't be surprised if there's at least 20,000 new recoveries in the pipeline, because the UK hasn't put any in there yet. The recoveries in Germany are dramatic, and they're pretty impressive out of Iran, assuming we're getting the real story. They're quite impressive out of a number of different countries. So I think my prediction that we hit 200,000 recoveries, fairly soon is probably by tomorrow or by the end of the week. And you know what? Could be 300,000 by the end of next week. And I think that if we start getting up to 400,000, then maybe we don't go much more than 1 million. Or we start getting the infection side under control, where the recoveries start kind of crossing over, and maybe the new infections kind of flatten out, and the recoveries keep going up. I think that'll be quite uplifting to everybody. So please God, that'll happen. I thought you did a very good job explaining to everybody just now on that. On the situation with the S&P.
Thank you,
because and this is like, no matter how bad it is, and when we went down into that abyss, remember Friday afternoon before the bottom on Monday. Remember, the bottom was down in the morning, up in the afternoon. We switched. The big lever in the sky went from bearish to bullish at noon on Monday.
Now, Monday was the 30th, correct? Okay, here we go. I've got the...
No, not this Monday. The previous Monday.
Oh, the previous Monday. Okay.
Yeah. And remember, the tech stocks fell off on Friday, and that was scary, because when all the strong stocks started selling off, that was a scare, for sure. But it was sort of like the last down leg, if you like. It was kind of the capitulation of sorts. So
previous Monday would have been March 23rd.
Yeah, that was the day. That was the turnaround day. And if you remember, 24th was as we predicted, the biggest up day in history. How about that? Or biggest percentage since 1931, and the biggest point move up in history of the Dow. So anybody who's listening and would have known we predicted that ahead of time. So as to where we are right now, it's kind of interesting that you pointed out that there's a kind of a double bottom developing there, Dwayne. And I think
Now, were you referring to the daily chart, John?
Yeah, to that chart you had on earlier on.
This one?
The bigger one, the one that had not the daily, the what you call it, the whatever you had up earlier on. 30-minute.
The 30-minute. This one.
Yeah.
Okay.
Yeah, and look, as I've said many times, when you get a rally, off the open like we did this morning, I mean, the market's telling you it took a shot at it, right? So you've always got to watch for the next bottom because you might get a better rally. This was a corrective rally we had this morning. What we want to see from this bottom is something similar to what happened on March the 29th. You see that? In other words, we want to see a strong up move and a trend change, and we want to see the potential for this thing to go up like it did, back up to that 2550 weekly trading zone. Mm-hmm. So there's a lot of reasons why you should be very alert to what's going on here, because again, look, so far we're down in the morning. We're up a little bit in the morning. We're down, to 1 o'clock. Yesterday, by the way, we rallied at 1:30 again, interestingly enough. And then I got some of the incredible sell signals on Apple and the markets in general, and we had this late sell-off yesterday, which was pretty serious. Mm-hmm. Right. And we lost, and remember, we were up 400 or so on the Dow, something like that. We were up on the Dow, and we gave it all back and went negative, and that's obviously a very bad development when that happens. Now, here with this today, we're getting a little bit of a rally right now, and as Peter Steidelmeier used to say, the market has to rally to break, and break to rally, and you gotta have that printed in your brain, because no matter how bad a market is, and we've seen some pretty scary markets in the last few weeks, there's always a rally. A rally comes out of nowhere, and you've got to be ready to catch these rallies. It's just, if you're short, you've got to cover, and you've got to go long, and and when these tops come, you've got to be disciplined about getting out, at the top. So, and maybe even going short. So, the one thing, if you never learn anything else, I mean, no matter how bad the situation is, a rally is always going to come. It could be in the middle of the night.
That's right. And more nowadays. It used to be the Globex was kind of like a shadow market. Nobody put too much stock in it. Certainly, you never saw major market moves begin or end on the Globex session. But now, more often, well, I don't want to say more often than not, but quite often, major market moves do have their beginning during the Globex session.
Right.
Major turning points, and that's a new development over the last 5 years.
Yeah. And another thing is this. I mean, let me give you an example. If by some miracle we actually did go up this afternoon, I'm not entirely sure we're going to, but I'm not ruling it out. Mm-hmm.
Well, we're at a weekly zone, John, right here at 54/55. That could be the support right there.
Yeah. If we did rally this afternoon, it would actually be quite constructive. It would be quite positive, because actually, why don't you put INO up, Dwayne?
INO, sure.
Yeah. He's got to get a better gist of what I'm talking about.
Let me find my chart. One second. Okay. Now we're clicking. Okay. You said INO, right?
Correct. Yeah.
Okay. Now that's a 5.
Okay.
You want a daily or a
Right.
30-minute? Or?
We could go to a 15 minute, maybe 15 minute.
All right.
Okay, yeah, 15 minutes is good.
There's 15.
No, go to 30. 30 is
30?
better.
All right. There we go.
Okay, so INO had this base, nice base, developed yesterday, okay, over the last few days rather, and it started breaking out yesterday and had a nice move up to 9.5 or 9:30 or so, okay?
Yeah, 9:32
Oh,
looks
sorry.
like.
Sorry, wait a minute. Yeah, that's right. And then it came back. It came back down, and I was a little bit disappointed with that because I had a feeling that, given what they're doing, it kind of looked like they
It
might go
actually
higher.
closed the preceding day's gap right there.
Right. So really, where we're at with this today is actually quite, it's basically setting up for what I believe will be a dynamic up move, and that dynamics is all rolled into this. Maybe you can squeeze it up a bit more so we get a little bit more history. So, we've been up and we came down, but basically this stock has got a habit, if you see later on, it's got a habit of basing out and then running like crazy, right?
All right, look at
But-
that's quite a base there. Now these are
Right.
30-minute candles, folks, so keep that in mind,
Right.
but it's a base is a base.
Right. And I think, did we go through FTSB yesterday? Was it with you? No, maybe I didn't. Anyway, look,
I don't know.
here's the thing. This thing ran up to $19 and it came back. And the question is, was the last run up a dress rehearsal for a much bigger up move? Or is that it for this company?
Are these guys
that's-
working on a cure, a vaccine?
They are well, in my view, they're certainly one of the top 4 or 5 contenders
Okay.
for actually delivering a vaccine possibly sooner than anybody else. Okay.
Okay.
So they came up with apparently the formula, the DNA of the vaccine was published like a month or 2 ago, just right before this run up. And it's funny because during that previous basing thing, there was a piece on San Diego TV, it was probably all over California. This little company that could, look at that base, right?
Look at this base
So this
prior to
this
the
little
run-up.
company that could, the little engine that could, beat the whole world. They came up with the vaccine quicker than anybody else. They've been working on, and there's a very, very real possibility.
Do they
that
have a
this
finished product yet?
Almost.
Okay.
That's the thing. And they're going to do some vaccine trials this month. In other words, they got a product right now. They already got the vaccine. They're going to actually start trials any day. And I think the minute they announce that, the stock is probably going to go higher, possibly quite dramatically higher. So we had a kind of a run up. We overshot and came back. The question is now, if you go to the next base, right?
To the next base? You mean scrolling back further?
No. Go to the.
Okay.
Listen.
The one we're building now?
Well, no. Just go back again. Sorry, go back.
Okay.
Yeah. See that little jump there? This thing actually went from about $3 to $6, and then it pulled back, and then it went up. So go to where we are right now. To date, up to date. Okay, so we've got the fact that we've got another base is really quite positive. So
It is.
and and the fact that we had a little bit of a run up yesterday is also quite positive because we're potentially poised for a kind of a dynamic upside break on this stock, and I believe it'll be quite sharp. So, and we don't know for sure whether the vaccine study is going to be a double-blind study, or whether it's going to be a, everybody's
Just give
gonna
everybody the
Yeah.
actual drug because you don't have there's no time to waste here.
Exactly. So, if it is a double-blind study, that would be really something. And if they stop the study because it's going so well or something like that, you're going to see this stock go through the roof. So I think you've got to be prepared for that. listen, it's no walk in the park trading these volatile pharmaceuticals. You got to have your wits about you. But it does appear to me that this thing is kind of winding up like a spring here,
Right.
and I believe we're fairly close, possibly within a few days, of actually, and if it breaks higher today, if this thing closes over 8, I would consider that to be quite constructive.
Did you hear about a ban on the purchase of gold in Europe?
I did not know.
Okay,
But,
yeah, I'm just hearing about it now. James just mentioned it in the chat box there.
Well, funny thing is, I think part of the pressure got from yesterday to today on the gold was caused by ABN AMRO going out of, I don't know whether they gone out of business or something, but they had to liquidate all their gold holdings by the end of today, I think. So it looks like they've probably done it already because the price has kind of gone up off the lows. And but if they've got some other thing coming out, who knows? But the
Check this out, Tom. Yeah, go ahead. I'm sorry.
Yeah, if you could just pull up the gold, I'd like to comment on
Sure.
what happened overnight. Remember, we had a blistering rally off the 1450 low, right? Something wrong there. That doesn't look right.
Yeah, yeah, you're right. It doesn't. There. Yeah, but even still.
No. Can you put the futures up?
Yeah, I
gold
can.
futures?
But look at these wicks. Does that look unusual to you? This is actual gold. This is spot gold. But I'll put it on. Let me put it on the futures. Something about those candles.
GCM.
Yeah, that's right. We just rolled to M. Okay.
Yeah.
All right. So you want 30-minute daily?
Okay. Something's wrong with that. So it did fall that much. Okay. So the point is we went down right after 6 o'clock yesterday evening. We made a nice bottom. We rallied up this morning. I actually said to somebody I thought we'd come back and test it, which we did, like 80, and we got a nice buy off that. Was looking very good, and then I actually got a sell at 1605, and bang, we dropped down. So actually, technically, this is not so great development right now. However, if we kind of get back above today's high, if we got up to 1620 today, I'd be pretty encouraged by what's going on with gold. And the 1st of April, we're only the 1st of April, so it might take a few days to get going. But technically on the chart, it actually looks pretty good. You see with that doji, right? You see that doji. You got several things developing here. You got a possible head and shoulders, reverse head and shoulders. I think the next leg up, if it fits in as one might expect, given everything that's going on with all the stimulus, I think you could see a very big move up to 1900, maybe 1900, possibly quite quickly. And for sure, I think I mentioned this last week, we went to a buy down here at 1450. Our indicators kicked in on that doji bottom, right? And then we went up, and I noticed that we were rolling over, late last week, and sure enough, bang, came down, but not to, we're not tanking and not making new lows or anything like that. So this is a little bit corrective at the moment, and it definitely looks poised for if we break out to the upside from here.
If we get above 1700, yeah, that looks very, very good.
Yeah, I mean, this thing could really, really travel, and I think that's kind of on the cards, right?
A measured move, John, would put us to 1900.
Exactly. I think it's the writing's on the wall, and as I explained, look, if Trump puts the infrastructure bill kicked in, right? That's 32 trillion. The debt's going to be 32 trillion before you know it. And right now at 1600, we would be $1,800 undervalued like no time in history. Is that right? $1,600 undervalued. I think $1,600 undervalued. So would be a very big deal. And we could potentially catch up $600 or $700 very fast. Now, I have a great idea yesterday. I just want to bring up on the show. Look, even though we've got this virus and everything, I think it's a kind of a no-brainer that all these state governments and federal as well should, maybe as part of an infrastructure bill, they should, what's wrong with these guys wearing hazmat suits and going out and repairing all the roads all over the country while nobody's on them?
Yeah, that's a good point.
Maybe the rails as well. So, I mean, this would and keep
I wonder how
people
hot
working.
one of those suits is.
Well, I thought about that, but it's still, it's no, it's not too hot in a lot of places just yet. So,
right.
But it's plenty of roads in New York that probably need potholes filled and things like that.
Yeah.
And this is the perfect opportunity to put millions of people to work, just like they did after the Depression.
Yeah, I was just going to say, my grandfather was part of the, it was a public works project, federally funded, all kinds of things. I'm trying to remember what it was called. It was called does anybody in the audience remember what that was called? Where
the New Deal?
No, it was men would leave their families, leave their homes, and go to work on these government-sponsored projects, just like what you're talking about. But it had a name, and the places where the men would go and be housed in these, bunkhouses, dormitories. Those are called camps. It'll come
70s,
to me here in a minute. No, it wasn't TVA, Stan. It was something else.
Back in the 70s, Dwayne, when the Alaska pipeline, it was about 75, 76, something like that. People like doctors and teachers and everybody quitting and going to Alaska because they were paying like $1,000 a week or something back then.
Oh, I remember. So, everybody was heading to Alaska to work the pipeline.
Yeah. So I think this idea is pretty, it's something that's needed, and you never get a shot like this again. So
Joan got it, John. It's the WPA. That's what it was called. The WPA. I'm sure that was it.
So one of the tough things about these recent rallies is they tend to sometimes they start kind of like just like we're rallying right now, and you don't really get a very good buy signal, but all of a sudden it starts popping up and then it runs away from you. I'm not sure that's going to happen just yet. I think might have a little bit more of a retest first, but if we get a retest and then we get a better reversal, then I think there's a chance that this thing could head back up. And
it's the CCC, the Civilian Conservation Corps. I remember they talking about my grandfather, how he left. They had to go work away from home just to have a job, and they were called the CC camps. Okay, thank you guys. Thank you, Keith, for sharing that. The Civilian Conservation Corps. So what you're thinking, John, is that perhaps that is one way of dealing with the economic side of this problem, and at the end, America's a better place. Our roads are fixed, our bridges, stuff that needs to be done. Okay, I'm with you.
Yeah.
Here's that measured move. Here's what the measured move on a daily chart and gold looks like.
The best thing to defend against this virus, if you go back and look at what happened in the Spanish flu, actually fresh air, being out in the fresh air and being out in the sun sort of fortifies your chances of beating it. actually.
So how did the Spanish flu come to an end? Was there the introduction of some kind of medication, or did it just run its course?
I think it ran its course. And never came back. Touch wood. Now we got something just as bad or worse. But anyway, by the way, there's some stuff on Twitter this morning that's kind of interesting.
Well, here, check this out just real quick. A short-term squeeze in the gold market. Bankers are using price jets or cargo planes to send bullion to New York. A refinery slowdown threatens supplies. Gold mining activity slows with the rest of the world. Physical demand for gold will rise because of stimulus. Be cautious with mining shares. I'm not sure why the warning on mining shares, because I would think the miners are going to do very well once they're able to go back into production.
Yeah, they actually look the strongest of all right now, all the mining shares. So they're ready to possibly take off big time. Also the fact that you're taking the production off the market is going to tighten up the market as well.
Look at this, a $70 per ounce premium.
Yeah.
Wow.
Yeah. So it's look, it's hard to say exactly when it's going to happen, but it looks like it could happen soon. And as I think I said yesterday, the more than likely, especially if they put a stimulus bill in, I think, look, I think right now, obviously people are very worried because getting back to normal is going to take a long time. I mean, Ford Motor Company shut down all the production this morning till further notice. I mean, they're not going to be building any cars for a long time because there's just a huge overhang right now. And maybe there's going to be some incentives to get people to buy stuff, back by the time we get to the fall. But I think a lot of people are going to be empowered by this when things get back to normal, and it'll take a few months for the momentum to build. But it actually could get to not a frenzy, but it could get back beyond more normal as the pent-up demand increases. And that's why I think eventually the economy will actually overheat because of everything they're doing today. So that's something to keep in mind.
It's like when you put your foot on the brake, the car doesn't immediately come to a stop. It takes time.
And you're gonna have an inflationary storm. There's no question about it. It's coming, and it's going to be quite epic, I think. And there's no way out of this anymore. I mean, the debt can never be paid off with this situation. I'll give you an idea. You know what Trump should do right now? He should issue a decree. Actually, they should borrow $10 trillion from the Treasury right now. They should borrow $10 trillion at virtually 0% interest, and start a sovereign fund for the U.S. like they have.
How would something like
Norway,
that work?
Well, the same way as it does in Norway or Saudi Arabia or
Now, is this
Qatar.
where you give each child a certain amount of money at birth?
Well, we talked.
We've talked about it before.
That back in 2000, remember?
Yeah, I remember.
If they'd done that, if they'd taken our ideas back then, a 20-year-old today would have 20 grand from the government, $1,000 a year, and with all the investment, he'd probably be sitting on a $50,000, nest egg. Mm-hmm. And if they add $1,000, each family adds $1,000 a year, he'd have $100,000 nest egg. So I mean, this is a kind of a no-brainer, cradle to grave type of thing that should have been done in the Depression. Because if you buy when at the worst point in history, how much has the market gone up since the Depression? Well, we were at where were we? 50 or 60 on the Dow, somewhere like that. Mm-hmm. And we went from 50 up to 391, and we came all the way back down to about 50 or even less in 1932. So divide that into where we we're at 30,000. Let's just say we're at 30. How many times are we up? We're up 1,000 times since the 1930s. So this is the time to be doing the same thing for the future, and it gives a lot of buying power to the government to help the market and help the economy recover. And ultimately, the government's going to win, because how about this? To say the Dow goes to 50,000, government could cash out and could basically pay off the debt. Think about that.
Boy, would that be nice.
Yeah. So
This alert, John, went out yesterday at 6:08 p.m. Eastern, right after the Globex Open, to sell 25.49 on the S&P, with the final trade to target being 24.55. And look where price found support, right at 24.55. And that was a 100-point move.
Yeah,
From the
no, it's a big
published
deal.
entry to the published target.
That's $5,000 trade.
That right
5,000.
there will, friends, ladies and gentlemen, that one trade with one contract would pay for your CFRN passport. Boom.
Yeah, and it's almost a $10,000 trade from yesterday afternoon. So it's
Yeah,
it's a really
yeah,
big deal.
yeah. If you include the 2 days back to back, absolutely. So
Yeah.
that's what I meant earlier. By the market is full of opportunities. I know the world's in trouble. People are hurting. Lives are at stake. But you know what? Every problem that you encounter in life, to some degree, money will help the situation. I know you can't buy love and you can't buy friends, but you can buy medicine. You can keep a roof over your head. You can put food on your table. So let's not confuse business and emotions and sentiment and all of that. I mean, this is the hand we've been dealt. The question becomes, how are we going to play it?
Absolutely, you've got to do what you got to do. And you know what? How many days have you had when the chips are down and all of a sudden something happens and you end up having a good day?
Mm-hmm.
I mean, we're in a larger sense. The chips are down right now, and who knows? In 2 or 3 months' time, you might change jobs. You might have a new opportunity. All kinds of things could happen. So you've just got to stay upbeat and just
Keep hope alive, because without hope, man, you can't even get out of bed in the morning.
well, I don't know whether Mike's still on, but remember at the beginning of the year, we were kind of like, we coined a word for the year, and it was success. And I think there's been a lot of success on this show. I think Mike's done very well.
Yes.
And unfortunately, we've been hit with this curveball, but we'll get past it. And it's ultimately going to lead. Like I say, I think almost everybody's going to say, Jesus, I beat the virus. I survived. So it's kind of like a near-death experience. People that have a near-death experience kind of live every day as if it's your last. One day you'll be right, but as a Irish comedian used to say, live every day as if it's your last, and one day you'll be right. You'll be right.
Right.
But the other one was how do you tell an Irishman? No disrespect to any of my fellow countrymen. How can you tell an Irishman coming out of a pub if he's got his head back with his mouth open, not to spill any? But anyway, that was a guy called Hal Roach. He was a very famous Irish comedian. He was a great friend of mine, and we had a lot of fun together. Anyway, so people, if people who these things, you've seen these shows where people survive. Remember Rescue 911, things like that.
Mm-hmm.
Look at John Walsh. I mean, what a terrible thing.
The guy that lost his kid, his son, right?
Yeah. I mean, I've been how I know the place where it happened. Hallandale, terrible thing to happen. I mean, just awful.
Was that case ever solved?
I think they did solve it. Yeah, some guy confessed to it, I think, and it kind of checked out. Some fellow who was dying in prison or something, and it turned out to be him. Just horrible. But I mean, John Walsh changed the world. I mean,
He did.
changed the
Yeah,
world.
he did some important work. Yeah, I agree.
And he saved a lot of lives, and put a lot of bad people.
Oh yeah, when they started that show, America's Most Wanted, man, if you're in hiding, if you're trying to blend in some small town somewhere, you just got a factory job, and you're keeping your head down, and you're not running red lights, and then all of a sudden, boom, there you are on national TV. You're right. He changed a lot. There was no place left for criminals to run because that show gained international popularity. And, if you're hanging out in Belize, boom, there you are on the TV. If you're hanging out in the south of France, boom, there you are on the TV. So, yeah, that was very powerful. And all that came out of his loss, out of his misery, out of the worst tragedy that he's ever encountered probably in his life. Look at the good that came out of that. And that's scriptural. All things work together for the good of those who love God and are called according to his purpose.
Yeah, kind of what made me think of that. I mean, look, we all had the opportunity to listen to Rick yesterday, who's obviously been through, near-death experience,
right.
and with his wife as well. And I mean, that was a very uplifting call for everybody yesterday, frankly. And it was very valuable.
He sent me a message that he would like to speak with you by phone sometime.
Okay, no, I'd love that. I'd be honored to. Sound like a great guy, and obviously got some pretty good connections too. So he's very plugged in, and I hope a lot of people are benefiting from. Obviously, went on Dr. Oz. I'm sure everybody was pretty helpful. And look, Dr. Oz is really a hero too. This guy's changed a lot of people's lives for sure. And
he's humanized medicine to a degree.
Yeah. I mean, look, he tells it straight, and he's a good communicator, and he does a great job. So kudos to him.
Indeed.
Look, you gotta salute the president. He's doing a fantastic job. I mean, that briefing yesterday was like 2.5 hours, and I mean, like, he's just on point all the time.
And they just won't give the guy a break. He can do right. He can do nothing right in the eyes of the far
Listen,
left.
Dwayne, there's no world leader almost in history could ever give a speech to millions of people in India in the middle of a stadium. I mean, that speech was just it's possibly one of the greatest events in the history of the world in terms of the size of the event. And he's back here, and he's right on this virus thing. I mean, there's a tweet out there this morning. There's two tweets. There's one from the World Health. You can't make this stuff up. There's one from the World Health Organization.
Okay.
I saved it. I don't think it's been deleted yet. But
let me see if I can find it.
Saying that I think it was February the 4th, saying the virus doesn't get transmitted from human to human or something. I mean, unreal. And then the second thing is
this guy irritated me yesterday when I heard him speaking.
Yeah, anyway, look, I won't say anything, but the other thing is Trump says in the State of the Union, we're going to beat this virus, and Pelosi's ripping up the thing behind him. I mean, ripping up his speech behind him.
Yeah.
As the fellow said yesterday, when you saw that tweet yesterday where Trump donated his salary and Pelosi's looking for a pay rise, and that's all you need to know.
Yeah,
that second thing this morning, the same thing. That's all you need to know. If you're backing these people, there's something wrong with you. So.
All right, John.
All right. Thanks a lot.
Hey, thank you so much. Appreciate it, and we'll talk to you tomorrow. Bye-bye. All right, guys, we're looking at the S&P 500 E-mini Futures 30-minute chart. Yesterday morning, in the live trading room, everyone was there. We discussed that this would potentially be the high for the session after the overnight high was put in. This was discussed right here, this little spike high. Turns out it was, and that's not because we're terribly clever or do magic tricks. We just know how to read a chart, which is something that you can learn. You can learn how markets work, or at least our interpretation of how markets work. You can learn to read a chart. And once you do those two things, there's nothing to stop you from learning how to trade. Now, there's a big difference between buying some indicators, putting them on a chart, and clicking the mouse when something says buy or sell. Okay? That's sort of like a trained circus act or something, right? That and what we do are miles apart. Now, I'm not knocking anybody, because people have been forced to do that, to become like a trained circus act, because they have no one to teach them how to trade. There's a shortage of a lot of things in this world today. Teachers are one of them, especially in the financial markets. Mostly you got folks that just want to pick your pocket on the way to Wall Street. So by the time you actually get there, pockets are empty. Okay? Now this is the truth. I know because I lived through it. In 2005, 2006, I was absolutely desperate to learn how to trade. And I put out a bounty. I had a radio show, I had an audience, I had websites. I put out a bounty. I will pay good money to somebody that will teach me how to trade. Now, I had a guru. I sat in a room with some other people. I heard them all ringing their bells every day saying, got him, got him, got him. And boy, did I feel like the village idiot. Because I wasn't getting them. I didn't get it. And I was frustrated, angry. I wanted my piece of the pie. I wanted my slice of the American dream. But I couldn't find anybody to teach me. Again, I could find these self-proclaimed gurus, and they would sell me indicators, and usually it came with a PDF, how to do this sort of thing. But that's not having a teacher. It's not having someone who will actually invest their time and knowledge with you in exchange for money. The laborer is worthy of his wages. And to whom much is given, much is required. So, it was a very difficult journey. Luckily, Michael and I bumped into each other. And together we committed to unraveling this mystery known as the markets. And it was troubling, and it was difficult, and it was expensive. But it brought us to where we are today. Now, if he and I did that, anyone can do it. You spend enough time and you lose enough money, you'll probably figure out some way to find some level of consistent profitability in the markets. How long will it take? How much will it end up costing? I don't know. I don't know. What I do know is that you can shave years off the learning curve and probably save a considerable amount of money by finding a teacher who will commit to teaching you whatever it is they know about the markets. Only two paths. Stumble around like we did and try to get there yourself, or find a teacher. Okay? Now, I won't tell you that Michael and I are the only two people on planet Earth that can teach you how to trade futures. That would just be ridiculous, wouldn't it? But we are making ourselves available. We have been making ourselves available now for a number of years. And in all fairness, we give everybody a week to come in, to use our charts, to use our platform, use our indicators, actually get trained 2 hours a day for 5 trading days. We give access to our indicators, to our alerts, to our discussion groups. If you come in on a trial, we treat you just like a CFRN partner, member, passport holder for the entire week. No credit card required, because we want you to be able to make a well-informed, intelligent decision whether or not what we do is right for you. We're transparent. We have no secrets. We call it as we see it. And we do our best to help you see it the way we see it. Yesterday, well, go back 2 days, we had a buy signal up here at 26.15. We also had a sell signal on that day. And let's take a look at it and see what it was. Let me pull up that Telegram channel. If you're on the current trial and you're not taking advantage of the discussion group, there's so much valuable information discussed around the clock. We have members who share their charts, who have a great knowledge of markets. One of the new members of our community, Stefan, he has been sharing a lot of charts. It's been a blessing to have him come aboard. Just a great group of people. So, I mean, if you've probably been in some of the, if you've been trying to learn how to trade, you've probably been in some of the, chat rooms or message boards that are out there in the trading world, and there's a good chance you had to put up with some garbage, and maybe you weren't treated with dignity and respect. But we believe in treating everybody with dignity and respect, because that's how, and all we ask in return, treat us the same way. And people do, and that's a blessing. So Monday night on the S&P, consider being short at 25.55. 25.55 is right here. Okay. Last night's alert, $25.49. Okay. And from $25.49, our final trade to target, I just had it up on the screen. Let me put it back up. Here we go. $25.49, initial target, $25.47. Second target, $25.40. The final trade to target is the weekly trading zone below. On a short trade, the final target is always the weekly zone below. On a long alert, the final trade to target is always the zone overhead. Again, the zones go out to our members Monday morning, 6:15 a.m. Eastern. Put them on your charts. Get ready for the week to unfold. Remember, only 3 things happen at a zone. There's consolidation, and then what did price do? It traded down to the zone below. This instance, we actually got a slice. Okay. Price attempted to pull back to the zone, wasn't able to quite pull all the way back, but we had a short signal at 25.49 with a final trade to target of 24.54/55. Not a mysterious number, no cloak and dagger, just the weekly trading zone below. That's how price works. It goes from zone to zone to zone, and it's been doing that, well, since the inception of the markets. But we have a documented track record of it since December 14th of 2009. That's when we first publicly published the zones for our members. Now, after this decline, look where the market found support. Today's Wednesday. These numbers went out to our members Monday morning at 6:15 a.m. Eastern. Am I saying that this is it? This is the bottom? Here comes the big turnaround? No. I'm simply pointing out that the market did what we expect the market to do. When it approaches a weekly trading zone from above, when it gets there, we expect it to find good support. Like it did here and here. Here, it consolidated, and when the jury came back, not going to hold. Took us to the next zone, which we sliced through. As price was rising, here's Sunday night, price gets to the zone, consolidates, comes back. Remember, important prices, important areas are almost always tested. So after we had a nice 57-point move, price gets back below the trigger, hands us a 23-point move, gets back below the trigger, and then hands us all of this. But notice on each level on the way up, consolidation there for 2 hours, then up to the next zone where we consolidate for 1, 2, 3, 4.5 hours. And then price tries to make a run at the zone overhead, just doesn't have the right stuff. Remember, price movement is dictated by order flow. And order flow is simply this: the buyers and sellers in the marketplace. No indicator, no oscillator, no guru moves the market. It's these folks, be they retail traders or institutional traders. Their buying and selling activity is what creates these candles and this movement. And if anybody tells you anything other than that, well, as your mom said, be careful who you hang out with, son. Don't run with the wrong crowd. Boy, is that true in the world of the financial markets. Don't get caught up with the wrong crowd. Don't get caught up with somebody who has some secret and they won't reveal it to you, and but they'll sell you something, right? Just be careful. That's all I'm saying. Again, Michael and I aren't the only people in the world that can teach you how, to navigate the futures markets. Sure, there's plenty of qualified people out there. I don't know any of them, but I'm sure they're out there. Okay. All right. So we've covered the S&P. Now, I posted this in the discussion group last night, and I'm going to repeat it here. When the S&P finds support and starts to move higher, the other indices will follow. The Dow, the Russell, the NQ. Now, is the S&P always the first one to turn? Can we just play follow the leader and make money off the other indices? Unfortunately, the answer is no. Sometimes the S&P does move first. Often it's the Russell. I mentioned that earlier, man in the street. Small cap companies. It's the closest thing to ordinary folks like you and I. I'm going to bring up the discussion group from last night. Okay. Yesterday during the show, we were talking about this setup and about, if you missed yesterday's show, please go watch it. All of our shows for years are archived at youtube.com/CFRN. Thanks, YouTube. Thousands of hours of market analysis, teaching, training, and us just shooting the breeze sometimes. So we talked about the potential for this move, and then there it was. It unfolded. beautifully for us. Then I said in the discussion group, now the times you see here are Pacific. That's how Telegram works. Telegram reads the clock on your computer. So if you're East Coast, you're going to see East Coast time. If you're West Coast, you're going to see West Coast time. When we reopen at 4:30, remember I said earlier the market closes for that 15 minutes from 4:15 to 4:30 Eastern. Stocks close at 4. Futures close at 4:15, but they reopen at 4:30. Trade for 30 minutes, then shut down at 5, and then reopen for the new session at 6 p.m. Eastern. So tonight, when the market reopens at 6 p.m. Eastern, that will be the beginning of the Thursday session. So last night or yesterday afternoon, I said when we reopen at 4:30, look for the market to continue down. The zone below is 2553/54. Below that is 54/55. That's a 100. That's 100 S&P points or 1,000 Dow points below us. And here it is. You can see the chart still. Where did price turn up? 2454/55. It's not voodoo. It's not witchcraft. It's simply the example of someone who has taken the time to learn how markets work and how to read a chart. The market does surprising things from time to time, but in between those surprises, its behavior is often quite predictable. Now, we never try to convince you that we know the future, because we don't. God did not create this universe that way. He gave Adam all sorts of marvelous qualities, but the ability to change the past or to know the future, he did not grant that to Adam. And those two things, the ability to change the past or know the future, those two things are inextricably linked for eternity. So the next time you come across a website or you get an email that tells you somebody has uncovered a way to tell the future, be very careful, okay? Just keep your hand on your wallet. Don't let your pocket get picked. There's a difference between telling people we know the future or we know what the next high probability move is. This is different as night and day, but it's a very important and distinctive difference. Now, of course, we expect the zone right below to hold till it doesn't, okay? Now, we know what happened. It didn't. We got a slice. Once we got the slice, and then we triggered the short alert, the downside target, zone below. Okay? Now, what's price trying to do right now? It found support. It's going to go look for resistance. Where might it find resistance? Well, there's a good spot. In fact, the market tried to rally, got turned down, tried to rally, got turned away, tried to rally, got turned away, tried to rally, got turned away. So we know that's a high probability spot for the market to find resistance. Once it finds resistance, then we want to be short. Back down to where? Support. Okay. If price can get through here, then what? This low connected to that low. If I simply extend that across, if price can get through that, then we're looking at the zone overhead. But wait, there's more. Now you see, when price tried to rally this last time, it touched this area of resistance, dynamic resistance. Remember, when price gets turned away here, that's dynamic resistance. That's resistance that was just created by the market's failure to push higher right here. Okay. But what happened along with that? Price ran into the BBC. Whenever you approach the BBC from below, whatever market, whatever time frame, if you approach it from below, you expect it to be good resistance till it isn't. Just as when you approach a weekly trading zone from above, you expect it to be good support till it isn't. So what's the next high probability thing here? Well, price is flirting with red and falling. Okay. If it can close above red and falling, you notice how this candle closed right at the line. Now we're printing a red candle. The market naturally wants to flow back to the BBC. Price always reverts to the mean. And in our case, the mean is green. All right. But there may be so much bearish pressure in the market, it's simply not able to do that. How do we know? Well, if price drops back below the step line, then I would be very interested in potentially being short the market back down to the area where we expect there to be good support. In a perfect world, I'd like to see price rally up just like it did here. I'd love to see it leave a wick in its wake extended up above the BBC, because that gives me a much larger area to be short, from say 24.80 down to 55. Is that about a 25-point move? If this candle closes below the step line, but you know what? We've got 28 minutes left in the life of this 30-minute candle. In a situation like this, what can we do? We can go to our smaller time frame. We can go to a 5-minute chart. The 30-minute is our guiding light. That leads the way. That dictates whether we're going to try and buy the market or sell the market. Price is above the BBC on the 5-minute. Right there where that bearish cross took place. Now, the larger the time frame, the more important the information, the more important the signal. So I don't put the same stock in a 5-minute chart that I do in a 30-minute chart. But it still gives me valuable information. So what the 5-minute chart tells me right now is that price is going to try to rally up to 24. 91, 92, call it 24.90. Okay, go back to the 30-minute chart. Where is 24.90? Right there. Just above the BBC on the 30-minute. Now remember what I just said? In a perfect world, what I'd like to see happen is I'd like to see price cruise right up to the BBC, trade above it. Remember this right here, this was a green candle. This is a 30-minute candle, but part of the 30-minute lifespan, it was green. Where you see wick right now, that was green. It was a big green candle, looked like we're going to the moon. But then we weren't. Because by the time the 30-minute candle closed, price had dropped back below the BBC, printed a red candle, And then we know what happened. Took us right down to the zone. Now, you got to understand that a lot of people, when this, and I don't mean our people, I just mean traders in general. When this was a bold green candle, you got a lot of folks getting long. Looks like the thing to do, right? Because there was no red, just green. Okay, so people go long. Where are they going to put their stops? Well, obviously they're going to put them down here somewhere. But you see this candle here? Right there and right there, probably, especially right below this, probably some stops got triggered. I'm surprised it didn't drop more. But buyers are very resilient. And everybody knows eventually this market's going to go higher, and everybody's trying to pick the bottom. Be very careful. Bottom picking is risky business, dangerous. So that dream, that perfect world that I spoke of, it's starting to look like it could become a reality. Let's go back to the 5-minute. Okay. It's still chugging along. And this is the number, 9091. Again, it's not bad, not magic. It's just the principle upon which the markets operate, and that's part of what we teach you. I mean, you're ultimately, you take our training, you learn our methodology, our strategy, how to use our indicators. You will become your own trader, okay? At least that's the goal. Now, if you just want to use our mechanical methodology forever, you can. Absolutely nothing wrong with that. All the questions have been asked and answered. So if you're trading on our mechanical model, once you understand it, then all you have to do is just sit down and do what the chart tells you to do at the right time. Mark Douglas said, perfect trading is simply knowing what to do, when to do it, and then having the conviction to actually do it without hesitation, without jumping the gun. Patience. Back to the 30-minute. We're approaching the BBC. BBC is at 2486. This area we've highlighted on the 5 minutes, 2490. Now, a lot of traders right here, right now, will experience anxiety. You want to pull the trigger, because when you pull the trigger, if the outcome of the trade is positive, forget about the money that's involved. Your brain is going to get flooded with endorphins and other happy chemicals. That's how the brain works. This is why so many traders have difficulty controlling their actions and their emotions. Because deep down inside, we're all just a little bit of a junkie in that we want that good feeling that we get. Now, hear me out. The good feeling comes not from the success of the trade. The good feeling comes from the flood of chemicals that are released in your brain because you had a positive outcome to the trade. And the opposite is true. When you have a negative outcome to a trade, there's no flood of endorphins. In fact, well, you know how it feels. This is where you have to learn to balance yourself, your thinking. On a good day, I don't want to rain on anybody's parade, but on a good day, don't tap dance on your desk. Because surely as you do, tomorrow you'll be curled up in a fetal position underneath your desk, wondering what went wrong. What went wrong is probably you did not do something that you know you were supposed to do, or the market just did something that was not expected. We always know, our traders always know, once they've been with us for a while, they always know. That's a big word, always. They always know what the next high probability move is. Doesn't mean they can tell the future, and it doesn't mean that that's what's going to happen. It's just the thing that has the highest probability of happening. Why? Because of the information conveyed to you by the graphical representation of investor and trader sentiment. Candlesticks. I posted a link last night also. I'll get to that in a second. There's a PDF that you can download, The Secret Life of Candles. If you just Google that, The Secret Life of Candles, CFRN, it'll pop right to the top. You can download that. There's a couple hundred candlestick signals. You might see some of them once or twice in your life. They're so out there. There's about 10 that you want to commit to memory. That's the purpose of just printing out that PDF. On gold, we had some windows of opportunity that we highlighted during the show. Remember, these were all posts from last night. Here are the gold windows of opportunity we highlighted during the show today. They got filled. Important prices, important areas are almost always tested. They got filled again. Once the major support was cleared, as highlighted on the chart. See, we had major support. Over here, we had resistance, which became support, which was still support. Then it gave way, and it once again became resistance. And look where price bounced from. The zone up to the support to resistance. Over here, resistance to support, back to resistance. That process repeats itself over and over in every market in every time frame. Once you get this concept written on the tablet of your heart, this bell's for you. Now, this comment was to the S&P. If buyers don't get some satisfaction pretty soon, they're going to stop buying. If that happens, that 100-point downside target becomes a screaming possibility. In fact, it becomes a probability. And there it is. Now, here's the same time frame, 30 minutes. This is all happening at the same time. Remember the specific time that you see there. This is what the Dow looked like. Then we were chit-chatting back and forth about brokers. Okay, here's what the Dow looked like on a 30-minute. Whatever happens at the open, now when this was posted, we were still waiting on the Globex open last night. Keep the big picture in mind. See what the big picture looks like right there? That was before the Globex open last night. That's what it looks like now. It's what the market showed us would be the next high probability move. So at the time, we were waiting for price and blue and climbing to meet up. They've met. We have to not only get above the BBC, we have to hold above it on the pullback. So short of some incredibly good news, You're looking at the future here. Downside move. If we drop to that area, 160 points below, and find support, that's the first sign a market recovery could be on the way. And there's some more chit chat. And then I showed how you can use our methodology and indicators on individual stocks. CHK. Okay. I talked about it running into trouble at 18 cents. I haven't looked at it since. Let's take a peek. Well, it did pop up. Oh, that's a daily. And so yesterday, on this chart, the issue is we had the 4-hour BBC overhead. Okay, the black and white lines a 30-minute, green lines a 5-minute, red lines a 4-hour. So we do 18 cents. It's a potential problem. And we didn't even quite make it to 18 cents. Where's the open? Right here. Here's the 9:30 open. It made a run, put in a double top. Oh no, look at there. Double top. If you follow the cursor across, 18 cents. Turned it back down. Now, how would we know that? Because it ran into the 4-hour BBC. If you want more information on what that means, just book a mentoring session. I'll be happy to cover it with you. And the only reason this stock even came to my attention was because it was up in a down market. Okay, this is where the S&P was starting to make its break to the downside. Okay, will it hold? Now, that's 53.54. So we're talking about this zone, okay? Will it hold? If not, look for support at 25.27, then 2,500, then a 70-point drop to the next zone below. And when price got below 2,500, important price, important area, see how it came back to test it? Then it came back to test it again. Buckle up. This was the beginning of that 100-point drop. At the same time, this is what the Dow looked like. This was at 6:13 p.m. Eastern, 3:13 Pacific. Here's what the NQ looked like. ES 5 minutes seems to want to churn up and go find the BBC. Patience. As long as price stays below red and falling, on the 5, stay away from any counter trend trades. Here's a counter trend opportunity. I don't put those in the alert channel because a counter trend trade just does not have the same high probability nature as a trend trade. 5-minute BBC has now dropped too low for counter trend trade as published. ES 30-minute, as we take out the low of the previous candle, giddy up. So again, you need some kind of an event. Something needs to happen to trigger you into a trade. And so last night on the 30-minute chart, that thing, aside from the alert we'd already put out, would be a break of that swing low. Keep an eye on the low of the candle the arrow is pointing at. Okay? Do I still have that on here? I guess I don't. so I can't show it to you. Oh yeah, I do. It's right here. The low of that candle. See how this thing, it drew way down to touch the BBC. And then we tested it, got back above the trigger, tested it again, and then when we broke that important support area, things really began to unfold rather quickly. There was a good question, Dwayne, if the NQ hits 77.37, is it shortable again? Okay, the answer was yes. Play it again, Sam. Our alerts trigger multiple times, not always, but more often than not, an alert will trigger more than once. Sometimes 3 times, sometimes 5 times, and sometimes just once. Hopefully this illustrates the need to wait for a trigger. Remember, we wanted a break of that low. On the chart I just showed you, we wanted a break of that low. An hour later, we still didn't have it. We never took out the swing low. Some event, like breaking the low, well, that opens a window of opportunity and provides clear sailing to the next obvious obstacle, which on a short trade would be visible support. Here's the NQ 5-minute. Pull back to the BBC. Either sell it here or wait for the previous swing low right there to be taken out. And then you got a nice little trade down to the zone. And it unfolded nicely. But don't forget the 30. Never lose sight of your larger time frame. Nothing magic about 30-minute time frame. But if you're going to use multiple time frames, and you should, okay, it's the best way to get a handle on the market. I use a 5 and a 30. Michael likes the range and the 15. 4-tick range and a 15-minute chart. Pick a number and then just stay with it. Don't jump around, always changing it up. Pick a number, stay with it. And you'll learn to feel the rhythm of that time frame. At some point, price will revert to the mean. Go back to the BBC. Could it drop to the next zone first? Absolutely. Does it have to? No. Does price always return to the BBC? Remember, always, that's a big word in the markets. Does price always return to the BBC? Yeah, it does. Always. We have to weigh what we know versus what we cannot know. See, some things are unknowable. Go back to Adam and the garden and what God gave Adam the ability to do, and the things he did not give Adam the ability to do. The fact that price always reverts to the mean, that's knowable. You can know that. But many other things about the markets are not known. And so start thinking about that. The next time you ask yourself a question about the market, you're analyzing a chart, you're getting ready to put on a trade, get a little notepad and number 2 lead pencil. Write down the things you can absolutely 100% know about what you're seeing and what you're about to do. Then make a list of the things that are unknowable. Play to your strength. Go with what you can know. Because the unknowable, well, I mean, it's a gamble. But a gamble well managed could be considered just assuming the risk. We're not gamblers. We just like to know that in a business based on probabilities, that the action we're about to take, the probabilities favor what we're doing as opposed to what we're not doing. And we base those decisions on what we can know, not what we Can't know. Trading in the Zone, required reading for all CFRN members. You become a member, I'll hook you up with a free copy. A legal free copy, so the widow still gets her royalty. And then, also, we own the rights to The Mind of a Trader, all 170 episodes, so I shared some of the episodes last night. If you haven't had a chance to listen to these yet, you really should. Good stuff. Here's the NQ 5 minute. Oh, if you're on the trial, make sure you take advantage of everything. The concierge alerts, the logic alerts, the weekly trading zones, the charts, the indicators, the live room. We even have a Telegram channel where we just go to shoot the breeze. And I may have forgot something in that list. Five-minute close above the BBC tells us price is looking for the 30-minute BBC. See that close there? Tells us the price was seeking that. Does this create an attractive 30-minute counter trend trade? Yes, but keep in mind, with a counter trend trade, the degree of probability is not as high as a trend trade. So I gave out some numbers. I won't ever publish the counter trend in the actual alert channel, but I will discuss them in here. With a strong momentum push, price could flow from one window to the next. If you do not have a basic understanding of how to read candlesticks, print this, keep it by your keyboard until you memorize them. You can just Google The Secret Life of Candles, CFRN, and it will take you to this PDF. ES 30-minute decision time again for the market. See, remember, this is still that swing low. Hours later, we're still waiting for that swing low to be broken. Hour and a half later. If price continues to consolidate here, we could see red and falling turn to blue and climbing, which would become support, which could send price in search of resistance, the BBC. This is just a shot from my phone, taking a walk. It's trying again. When it gives way, if it gives way, the move could be fast and furious. The point I'm trying to get across is simply that one of two things is about to happen. This is what we wait for. Opportunity. See, every time you look at a chart, there isn't always opportunity staring you in the eye. Now, the Dow 30-minute red and falling became blue and flat. The NQ turned blue. But if the man in the street, the Russell small caps, is leading the way, see, it didn't turn blue. The Russell is either leading the way or it's the last of the party. When they all four sync up, the S&P, the Dow, the Russell, and the NQ, that's very important. And eventually, on any kind of an extended move, all four will sync up. And by sync up, I simply mean they'll all be trending higher or lower, okay, on an extended move. Another shot from my phone. Remember, this is when it was getting late in the evening. Remember, whatever direction we're trending in when London opens, which is 3 a.m. Eastern, we tend to continue in the same direction. That's an important thing to know. Now, it's not 100%, and very few things are, except price reverting to the mean. That's 100%. This is about 70%, maybe 75%. Whatever direction we're trending in when London opens, we tend to continue in the same direction. That's not true of the Wall Street Open. Wall Street Open is a coin toss. And at 10:57 p.m. Pacific, The daily chart, price met blue and climbing. Did the Russell hit the circuit breaker? It has indeed. Now, at this point, I stepped away, and this is where Stefan stepped in. He just picked the ball up and ran with it, okay? And he posted a lot of great charts with a lot of great information. He details them out. He analyzes. His analysis is very good. This is information that you have available to you. These are the kind of people that you have to answer your questions. We're all on the same team here. There's no ego battles. Nobody's trying to be better than the next guy. We're just all trying to help each other cross the finish line. This is what Michael and I dreamed of in the beginning. And here it is. All right, I've bent your ear long enough. Good word for the day. Still 2.5 days left on the trial. If you haven't taken it, go to eminitrainingschool.com. eminitrainingschool.com. 1 Peter 1:6 says, there is wonderful joy ahead. Now, as we look around today and things that are going on in the world, we might have a hard time seeing that. So we have to develop an overcomer's attitude. In 1962, in a classic study called Cradles of Eminence, Victor and Mildred Gortzel investigated the family backgrounds of more than 400 highly successful people. They sought to identify the early experiences that may have contributed to their remarkable achievements in life. They included people like Einstein and many others who are famous and admired. Their backgrounds proved to be very interesting. 3/4 of them came from troubled childhoods, enduring poverty, broken homes, parental abuse. 1/4 of them had physical disabilities. Most of those who became well-known writers or playwrights watched their parents embroiled in one crisis after another. Now, here's what the researchers concluded. The need to compensate for disadvantages was a major factor in their drive towards personal achievement. These people had one thing in common. They had an overcoming attitude. 1 John 5:4. This is the victory that has overcome the world, our faith. When you have faith in God and yourself, you can end up doing things that astound even you. The problem that seems so formidable today can become the very thing that launches you into greatness tomorrow. The Bible puts it this way in 1 Peter 1:6. There is wonderful joy ahead, even though you have to endure many trials for a little while. These trials will show that your faith is genuine. It is being tested as fire tests and purifies gold. So when your faith remains strong through many trials, it will bring you much praise and glory and honor. And that's our good word for the day. Whoops, that was a bumpy exit. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a one-free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own diligence and consult with a licensed securities broker or financial planner before making any investment decision.